Taking a look at figures for house prices across the UK, with data released in December 2020 showing transactions up to the end of November 2020, and the nationwide house price index reporting 7.3% growth year on year, Halifax reporting 7.6% growth year on year. So the first COVID lockdown bounce continues across the UK, with property values continuing to rise at a fairly rapid pace, and certainly a lot more than people were predicting when the lockdown was entered at the start of 2020. But looking at the underlying data, there's some interesting things to pick up in terms of what's going on in the housing market. And one of the big things that's driving the market at the moment is not actually the first-time buyers. It's second-time buyers, it's home movers. And this behaviour very much is driven by that first lockdown, with priorities changing. A lot of people looking for more outside space. Gardens are a big driver in terms of demand, and so is enough space in a property to have a home office as well. And that's why we're seeing this kind of shift in the marketplace. Now, traditionally, it's first-time buyers who drive the market. So this tells us that probably rises of this level are not going to be sustainable for the long term. This is a short-term bounce, helped in no small way as well by the stamp duty holiday, which runs through to March 2021. At this stage, there's been some calls from the industry to extend the stamp duty holiday because there's big concerns within the industry, and some research out in the last week suggesting that a lot of sales agreed in December are unlikely to complete in time to qualify for the stamp duty holiday, and there's concerns within the industry that up to 60% of sales agreed within the last 4 to 6 weeks could fall out of bed. Certainly some evidence already in the marketplace, some properties that were marked as sold subject to contract coming back on the market because conveyancing timelines have been significantly affected by the changing work patterns in the UK in response to the coronavirus crisis. That said, what we are seeing is still a fairly healthy market overall, and while we may be tracking a little bit higher than real price rises because people are getting slightly excited and paying slightly more for properties than they maybe should to save that money on the stamp duty up until March of next year, we are seeing some indicators of real demand in the marketplace. Mortgage approvals remain at record levels at just over 90,000 mortgage approvals for the month of November. Sales are over 105,000. Both of those figures are significantly higher than this point last year and significantly higher than the month before as well. New buyer instructions, agreed sales and new seller instructions are all still in very positive territory, as reported by the major estate agency industry bodies. However, all of those measures are coming down slightly. So even though they're still in positive territory, the balance of those is coming down towards more normal levels. It's still very much a seller's market, with buyer registrations outstripping seller registrations, but those are coming more into alignment, which suggests that we're likely to see continued price growth in 2021, but maybe not the same rate of change that we've seen over the course of 2020, and possibly see a return to a more normal market, with first-time buyers being the real driver of demand, because traditionally that is what underpins the average house prices across the UK. Regionally, all regions up. Scotland slightly less than the rest of the UK, but regionally all regions are reporting growth over the last 12 months. So this is not a case that it's a kind of two-step growth pattern. This seems to be affecting the whole of the country, but the big thing to pick up from this is a big push towards houses as opposed to more dense type of accommodation. Outdoor space and also space for a home office setup is one of the key things that buyers are looking at. If you are considering a flip strategy or considering slimming down any of your portfolio over the next 6 to 12 months, it looks like a good time to be selling properties in the marketplace. There's good buyer activity in the marketplace, there's good demand factors, and especially if you're meeting that market need of having some outdoor space, having enough space within the property to allow for living space, but also that home office setup, that's what buyers are really valuing at the moment. The other thing to keep an eye on is the house price to salary ratio is inching up, and that is a concern for the long-term demand in the marketplace, especially when it's highly likely that at some point over the first 6 months of 2021, with the UK government announcing the rollout of a vaccine, it's likely they will start scaling back some of the government support for businesses and individuals related to coronavirus. That will have a knock-on effect to the amount of disposable income that people have, and it's quite likely that certain sectors of the UK economy are facing fairly heavy levels of redundancy. There has been a big shrinkage in the economy since the start of 2020 as a direct result of the pandemic. And while the government support has been there, the average person has not been feeling that maybe as much as they will once that government support disappears. So bear in mind that the house price to salary ratio inching up and potentially pressure on people's wage packets coming in 2021 could further subdue growth in house prices over the coming year. That said, supply is still much lower than the demand that's available, and part of that is also a result of the pandemic because construction has been slowed down significantly as a result of either the national lockdown or the local lockdowns, the tiered restrictions that have been in place throughout most of 2020. So we look forward to 2021 to see some growth factors in the housing market, but probably at a more subdued level than we've seen over the course of 2020.